Let's cut into the ZEE entertainment con call. I think we're going to be cutting into.
And the Indian one?
As I said, difficult for me to comment on that part.
Oh, okay. That's all, Puneet, from my side. Thanks a lot.
Thank you, Anish.
Thank you. The next question is from the line of Sachin Salgaonkar from Bank of America. Please go ahead.
Hi, thank you for the opportunity. I have a couple of questions. First question is, Puneet, on the timing, which is why make an announcement right now versus wait for a scenario where, let's say you guys are in a due diligence process versus a particular strategy with a particular strategic partner and then make an announcement.
So, Sachin, we've been getting proposals from several interested parties over the last few months. And because we wanted to cut any speculations out beforehand itself, and that's the reason we have chosen to go out and transparently talk to the shareholders. Also, given the fact that there are a lot of rumors happening on the pledge levels as Abdi's just talked about. So this is a proactive means for us to, stop any speculation towards this.
Okay. So does that mean that, you guys already have, a couple of guys already, where you guys are talking with?
Yeah, we've had some serious interest over the last few months from several players, a few players at least.
Okay, got it. And second question is, in terms of a strategic investor, now, basically trying to classify into three buckets, and I heard what you, told Abnish. One is, the internet companies from US, which, could give you the technology, expertise. Second is the Chinese internet companies, which also bring up their own expertise. And third is, more like on the lines of a media conglomerate, which has, experience from developed markets. If you had a choice, what would be, your pecking order per se from these perspective?
Well, I wouldn't put a pecking order as of now, Sachin, because all three bring some different aspects to the deal or to the transaction. I think we will be openly considering all of them going forward and see who comes up with the best proposition for us on a strategic alliance.
Okay, and then last question is from a potential strategic buyer perspective. Half of the up to 50% of the promoter shareholding. Perhaps the strategic partner would have a relatively slow, lower stake. So, are you open to a scenario if the partner is really good that you guys could be lower than 50% and a potential strategic partner could get the control of the company?
Sachin, that's structuring of the deal, right? And I don't think we are at that stage right now. We are saying the promoters are committed to this business and hence are willing to part with 50% of their shareholding. But if the structure demands where the strategic partner wants more stake in the company through a subsidiary or directly, we are open to those discussions.
Yeah, so I was referring more to a Disney Fox kind of a structure, what we saw. So are you guys generally okay with that kind of a structure?
I don't think we are at this mode looking at exiting this business. Our commitment still stands. But having said that, if it's a check I can't refuse, so be it.
Got it. And sorry, the last question is, is March and April of 2019 the last, is that a hard deadline what you guys are looking or it has some flexibility?
So this is something that our bankers are confident of getting us a binding offer on. Obviously, these are all subject to regulatory approvals based on what kind of a strategic partner is coming in. So those things are something that may take a little bit longer, but binding deals, etc., our bankers are confident that this timeline can be met.
Got it. Thank you and best luck for this.
Thank you, Sachin.
Thank you. We have the next question from the line of Vivekanand Subbaraman from Ambit Capital. Please go ahead.
Hi, two questions from my end. One, what kind of global support are you looking for? You mentioned that you want to transition into a global media tech play. Can you elaborate on the kind of support that you're looking for? Secondly, based on the serious interest that you have had from the players that you were conversing with, what are their thoughts on considerations for them to acquire or choose partners in India? Thanks.
So I'll take the second one first, Vivekanand. I think from their perspective, ZEE is a very uniquely positioned business that gives access to the Indian market for them. I don't think there is another asset like ZEE available out there which can be had on a platter. I think to build it ground up for anybody will take at least a decade, if not more, and multiple billions of dollars to access this market to even attempt to reach the position that ZEE is at today. Having said that, from our perspective, it's not just technology that we are looking for. Definitely somebody who can catapult us to take our product in terms of technology and geographical reach to beyond the South Asian diaspora is what we are looking for, from our perspective.
Right. And in your view, how important it is to get support in the form of technology and distribution versus, say, capital from a strong player? Is that even a consideration, or that's not at all required?
Technology is definitely far more critical to us than just pure capital. I think that's where we will be leading more.
All right. Thanks.
Thank you. We have the next question from the line of Adi Desai from York Capital. Please go ahead.
Hi, guys. Thanks for the call. Wanted to get just on the last question. As you said, whether it's like distribution that's like kind of really the bigger part of our consideration over here, or whether it's effectively to develop kind of like sort of thing that's more into content going forward, that's really our bigger consideration. And I guess the second question from a strategic point of view, the promoters obviously would like to sell less, but the other side, the buyers will want to have a larger interest in the company as well. So how do we kind of look at those kind of conflicting desires over here? So to make sure, like, I don't assume that there's a bid-ask in terms of pricing. It's more of a bid-ask in terms of how much equity stake to take in the company. So how do we sort of solve for that issue effectively? And just, those are two questions from me.
So the first one, definitely from our perspective, we are looking at going to the global diaspora with our content. That's our critical ambition. You know, we've been making content in the non-South Asian languages in 12 different countries, and we believe the strategic partner can catapult us to take that to a much larger base from our perspective. On the second part, I would request Himanshu to step in and answer that for you.
So on the second question, Adi, you're right, there will be a bid-ask not only on the quantum of stake, but there'll certainly be a bid-ask on pricing as well, because, it is for what kind of stake and, what quantum, what rights, and what kind of premium. So, there will be a bid-ask on both the aspects which will determine the deal.
Got it. So I guess to just sort of follow up on that, I mean, how do we solve? Are the promoters, as you said, is it maximum 50%? Or the promoters ideally would want to sell less over here, obviously to take care of other considerations. I guess the question is whether it's the bringing the right strategic partner over here, or is basically trying to sell enough to, as I think Avnish kind of mentioned, to take care of liabilities also in the group, and what is really driving this transaction?
No, it's clearly from the strategic partner aspect that we'll be considering this. I think the second is just a byproduct of it.
Okay, thanks so much.
Thank you, Adi.
Thank you. The next question is from the line of Vikash Mantri from ICICI Securities. Please go ahead.
I would have a rather lengthy question. Sorry for that. If I go through the press release, we talk about looking at the semiconductor business but ruling out of because of large capital requirement as a group. Then we also talk about a proposed to basically address the SL Group's capital allocation priorities as a reason for this as well, per se. The question here is that what has changed so materially both internally and externally for the company, that we need to end up selling this portion of the business. The reason why I do not want to, I cannot appreciate the strategic partner tie-up is because this group has established 4 industries in the country, be it broadcasting, be it cable, be it DTH, be it packaging, on. So, and they've gone globally with broadcasting. So, is the disruption in the environment so difficult and anticipated to be so difficult that we can only maneuver it through a strategic partner?
So I'll take the second part first, because I think the biggest part is that the entire investor community has been asking me, how will you compete in this new digital world with the truly the media or the tech giants going forward? And we do believe that if we need to achieve our ambitions faster, we need to partner with them. We can continue to do it on our own and be a smaller player fighting the South Asian pie or fighting some other smaller market pies, but definitely we will not be able to be a global content or a tech company in the near term if we are at it alone. I think the other industries you mentioned, some are restrictive to geographies like India. Packaging, for example, was not restrictive. It could travel. There are heavy regulations for broadcasting. There are heavy regulations for DTH and cable companies in the rest of the world. For us to go and actually be a content company in the US, the laws that are required are so stringent, unlike our country, which welcomes foreigners with open arms. I believe that getting a strategic partner will definitely help us achieve that goal, and I'm sure you will appreciate that in the near future, Vikas. On the capital part, Himanshu, you want to quickly take that?
So yeah, those are, because there are certain other businesses like, for example, the semiconductor business, which we've mentioned in our press release, which the group has identified as, probably a fifth, like you said, 4 new industries. This is the 5th one that the group is looking at starting soon, in addition to other businesses as well, for which there is a high capex requirement, at which the group needs to allocate its capital, and this, along with the infra sale, has been identified as a source to be able to do so.
So, sir, I do agree there are a lot of queries and questions on the kind of liquidity of the group. So just a feedback that it would help a lot if we could put that in the public domain, so that all questions related to what is the debt, how much is the pledges supporting the debt, what is the margin that we have against the pledges. If all those data could be put in public, I think that could solve all or end all the rumors per se, and everybody could then take an informed opinion about it. So that's just a feedback I wanted to give.
Thank you, Vikas. We'll take that up and discuss internally. And
that's all. Thank you.
Thank you, Vikas.
Thank you. The next question is from the line of Ali Asghar Shakir from Motilal Oswal. Please go ahead.
Yeah, thanks for the opportunity. My question was, on the deal structure. So, one, you mentioned that, this deal is not primarily to address the pledge factor. And second, also, you mentioned that, whether it is 50%, up to 50% or more stake sale will be decided with time. So, in that context, my question was, why is this, partnering not happening at the company level, but more so, at the promoter level? I mean, a tie-up with a media tech company could also be through a fundraise in the company, right? Which would not only give funds to the company, but also a sizable stake and, a technology partner, or probably an acquisition. Why is this, deal structure at the promoter level?
So, Ali, firstly, the company does not require capital for its immediate plans. Therefore, we are protecting the minority shareholders' interest while we are bringing it at the promoter level. Having said that, this brings in the future potential of the strategic partner to co-invest with us to further accelerate the growth of the company, as I've been talking about, in our global ambitions. And that's the reason for this structuring the way it is happening. I can add here very, very confidently that it is the promoters' confidence that we are able to rebuild to expand the business much faster with a strategic partner, and then therefore we are willing to part with our own stake for the reason of ZEE's betterment.
I presume the point you make here is basically, invest more, right, or aggressively in this, in probably the digital segment. So, that in itself would imply that you may probably have to, either invest in your content or technology, which may probably, sooner or later, if we expedite that investment process, we may require capital. Or will that not be the requirement at all?
No, Ali, as I said earlier also, that we are open to any kind of structuring, whether it be only at the promoter level or even at subsidiary levels for further building capital for growth of the digital business, etc. So I don't think that this is the only transaction structure that we have announced. I think it is something that we are willing to, as promoters, do. And we are open to considering any other structure that the strategic partner will want us to consider.
Fair enough. So this is not just restricted to the promoter level stake sale, right? It could also be towards company stakes, right?
Company, subsidiary, it could be either or.
Great. That answers my question. Thanks a lot, sir.
Thank you. The next question is from the line of Yogesh Kirway from B&K Securities. Please go ahead.
Yeah, thank you for the opportunity. Sir, so would the promoters of the company be open to a possibility that they would not be a single largest shareholder going forward after the strategic investor?
Okay, ZEE Entertainment, the key reason why they made the announcement right now versus after getting in some, after entering into a due diligence with an interested party is because they were getting a lot of proposals from a few players. And on the subject on whether the promoters are open to selling more than a 50% stake, they said yes. If the strategic partner demands it, will they exit? Perhaps if the check is an amount that they cannot refuse. We'll slip into a very short break. Just keep your eye on Motherson Sumi because that has now slipped more than 6% from the top of the day. One concern, as Nigel pointed out, has been an increase in their sequential debt by close to 35%. And secondly, because the subsidiary performance has been quite weak. So SMR profits are down 22% on a year-on-year basis. And even SMP, they managed to report an improvement in their revenues by about 4%, but the absolute EBITDA came down by 12%. So there is a weakness in SMP and SMR, both the subsidiaries of Motherson Sumi, at least in terms of their profitability, which is what is putting pressure on the stock. Get into a break. We'll continue our conversation with Tata Steel. Stay tuned.